Today, we're diving into a data-driven threat analysis of Bitcoin's volatility squeeze. We're looking at a powder keg in the market, and the data is showing that the fuse has just been lit. A massive volatility squeeze is coming, and I'm going to show you exactly why. $53.3 million. Now get this. That's not the total amount of leverage in the market. No, that is the amount of capital that is sitting there, about to be wiped out at a single critical price point.
You see those bright yellow bands on the heat map? Those aren't just data points. There are basically gravitational wells of money. This immense financial pressure is sucking the price right towards it, making a violent move not just a possibility, but a certainty.
Right now, Bitcoin is caught in this brutal tug-of-war. Above us, a massive wall of short positions trying to yank the price down, and below, an equally dense trap of long positions desperately trying to pull it up. Something has to give, and when it does, it is going to be explosive. If you find this data valuable, go ahead and drop a like and share this explainer. Okay, first, let's break down the main threat zone above us, the upper liquidation wall. This thing is composed entirely of short positions, people betting against the price. And here's where it gets really interesting. See this cluster of short liquidations sitting right around $92,000? That is a honeypot for market makers. I mean, they have a powerful financial incentive to just drive the price straight up, trigger all those liquidations, and scoop up that cash.
This is what we call a classic liquidity magnet. The price is just drawn to this area like a moth to a flame. You know, if you want to understand how these market dynamics really play out, make sure you subscribe to the YouTube channel for more deep dives just like this one.
Now let's look at the other side of this battle. We have the lower support trap, which is a really formidable force of leveraged long positions. We can clearly see the support here. There's a dense zone of long liquidations formed right around $89,500. For a lot of buyers, this is the breaking point. If the price even dips below this level, they'll be forced to sell. The cause and effect here is pretty straightforward. If the price breaks through the support, it's going to trigger a domino effect, a cascade of forced selling, sending the price into a nosedive. For real-time analysis on this stuff, follow us on Twitter for more updates. So how did we even get here? I mean, this pressure cooker didn't just appear out of thin air. It's been building for a while now, and the data is showing it is about to blow. It's amazing what a difference just 8 hours can make. On the left, you see the heat map at midnight. On the right, this morning. See how those yellow bands have gotten so much brighter and tighter? The walls are literally closing in, and the price is trapped in an increasingly dangerous corridor. And here are the numbers to prove it. The total amount of money at risk at this one level peaked at over $53 million. This isn't just random market noise, folks. This is a deliberate concentration of leverage, building up a ton of potential energy for a massive breakout. If you appreciate this level of detail, drop a like and share. So, this all leads us to the critical question. With this insane pressure building on both sides, where does the price break next? So, what does all this data actually mean for you? Let's synthesize this and break down the key takeaways for navigating this high volatility environment. Here's what you absolutely need to remember. 1, the price is trapped. 2, a huge, sharp move is coming. It's highly probable. 3, watch the $92,000 resistance and the $89,500 support like a hawk. And 4, when one of these levels breaks, it is going to happen fast, so make sure you subscribe to the YouTube channel to stay ahead of the curve. The data doesn't lie. The market is a coiled spring, and it is just about to snap. The only question left is, which way will it go? Thanks for watching, subscribe, and drop a like below. Follow us on X for more updates, and we'll see you in the next one.